Yo, 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 CPA Strength here. You know who it is. I'm the strongest licensed CPA in the state of Florida. And what do? I teach the world over accounting by building block by basics. You know what it is, but hey, if you don't know what it is, check out this playlist over here. Because it happens to be the best playlist in the whole entire world. It'll make all your dreams. Just hit the playlist, man. Come on. Look what number this is. You happen to be one of the lucky people in the world to see my classic series. This is my classic series, man. This is number 84 of my classic series. This is depreciation. We're going to do a depreciation expense at the end of a year, 12/31/15. This is, I know, this is our, we've done a journal entry per month. I think this is our 12th. Yes, this is our 12th, because this is our 12th month, our 12th journal entry of our Widgets Inc. We've gone a whole year. So now we're going to do this adjusting entry. We might do more adjusting entries. Alright, I want to show you. This is the DCA lure. This is why I am pretty popular. James Bond, right? Charlie's Angels. Woo! Obi-Wan Kenobi. Glow sticks. No, never. DCA lure. Debit, credit, asset, draw, expense, liability, equity, revenue. This is what I'm known for. This has helped tons and tons and tons of people. Anyways, I don't want to stick too much on this depreciation. It's a depreciation journal entry. I've done, I think, 3 or 4 depreciation journal entries. I've done a whole separate video on accumulated depreciation and how it's a contra asset. Probably if you don't understand this journal entry, you might want to go back to an older video to understand a depreciation journal entry, or you can watch this, but no, I have other ones about that. This is going to be, I like how our journal entries affect our chart of accounts, our general ledger, our balance sheet, our income statement. That's kind of what I think this particular Widget Inc. is kind of what I'm trying to focus more on. So anyways, let's go to this journal entry. 12/31/15, last day of the year. Widget Incorporated makes a depreciation journal entry for $800, an adjusting entry. So what would that be? Well, you know, we figured out it was $800. Now, I think what is important on that is we took a straight line, because we only made $3,200 of profit this year in our business. You'll see that's in our last well, you know what, we just took straight line. We didn't want to take accelerated depreciation because we didn't need more expense, and you'll see because we only made $3,200, so we're not going to have to pay much taxes right now, or hardly or any taxes. The way it's going to work out, we're not going to have to pay any taxes. So why would we want to take more expenses when we already don't have to pay taxes now? So we don't want, sometimes that's not the case, and you would want to take accelerated depreciation, more expenses now. That's not our case, because we're hoping to have, see, if we use all our expense up now on this depreciation expense, excuse me, we wouldn't have any depreciation expense for, per se, next year. But next year we're hoping to have a nice sizable profit. So say we make $40,000, $50,000 next year, and we don't take much depreciation this year. We still have some depreciation for the year that we made $40,000 or $50,000. So it can actually, that depreciation expense can actually benefit you. Hope that made sense. That concept right there took me a couple years to actually kind of figure out. So don't worry if you're like, wow. Anyways, and that's the great part about the online learning. No one knows if you're sitting over there going, oh, I don't know what's going on. So I love the online learning. Anyways, how do you do a depreciation entry for $800? I have to move fast off this board since I talk too much. Well, we know depreciation, it's depreciation expense, and then that's a debit. Expenses are debit in positive form. And then this is a weird one. The credit for depreciation expense is a weird one. It's accumulated depreciation. It's a contra asset. I've gone over it before. So that's going to be the credit, is accumulated depreciation, 800. It's a contra asset. Let's see. So it's going down. So it's a contra asset because a normal asset has a positive debit, and this is a contra asset because it has a positive credit. It's kind of weird. But anyways, that's the credit. The debit is depreciation expense, $800, and it's an expense. So, as you can see on DC Adler, an expense going up is a debit. And that's the journal entry. Let's go to the next board. Yo, 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 I think you can see me. Oh, you can see them guns too, son. What? Woo! Anyways. Alright, what do we do in chart of accounts? We added 2 new accounts. We had depreciation expense and accumulated depreciation. It was the last journal entry of the year, and we did not have depreciation yet on our books. This is our first year in. So, we had to add chart of accounts. It is an asset, it's a contra asset, but it'll go under the assets and chart of accounts as an asset. I changed it, we just have all assets over there, right? And under expenses, we got a depreciation expense. So we added 2 new accounts. We did our journal entry. In our chart of accounts, we had 2 new accounts. So let's click inside of each account. Let's click inside depreciation expense. On 12/31, we have $800. Let's go up here to accumulated depreciation. Let's click inside there, and let's get the accumulated depreciation here at 12/31/15. It's $800. So both these accounts are brand new, fresh. They're each side. See, this is the debit, this is the credit, and they're both at $800. Now, good, I've got a couple minutes. Let's go to the balance sheet, income statement. All right, hopefully here we can talk here. What are you saying? Long hair don't care, right? Hopefully. Yo, right? Hopefully we're going to talk about the balance sheet, the income statement right here for a couple minutes. All right, yeah. All right, all about depreciation expense, how it affects the income statement and the balance sheet. Now this is an adjusting entry. We might have more entries at 12/31/15. Typical to have. What's going on? Okay, everything's good. Typical to have a couple adjusting entries. So let's see, what 2 accounts did we mess with? We messed with depreciation expense, which is an expense of $800, and we did accumulated depreciation, which is a contra asset of $800. We'll get to that secondly. Let's go over to what our depreciation expense journal entry did to our income statement. Now this is the last day of the year here, so look at that period, the whole year, 1/1/15 to 12/31/15, the whole year period. And through the whole year, we ended up with $22,000 of widget service and $18,800 of expenses, but comprised of $800 of the depreciation expense that we just did. Oh man, I should have, as you can plainly see, we did not use the checking account. This is an adjusting entry, which we are not using the checking account. We used it when we bought the truck though, right? Now we're kind of reducing what the truck's worth, but we're going to get to that in a second. So this is what happened. You know, our journal entry affected income statement and affected the balance sheet in this occasion. Which happens quite often, because a lot of times you have an expense and something in the checking account. So you have an expense and asset. Anyways, 22,000 minus 18,800 is 3,200 net income. See, so anyways, the net income from the income statement flows over to the net income to the balance sheet and under the equity. So the balance sheet is assets equal liabilities plus equity. Look, our liabilities didn't change. Our equity did change. Our equity reduced by $800 in the way of net income, because our net income reduced by $800 because of our depreciation expense, because we had an added expense. So if assets equal liabilities plus equity, and our equity's been reduced because our net income's been reduced, so liabilities and equities have been reduced, what's going on with the assets? Well, the assets have been reduced as well with the accumulated depreciation. It's been reduced by $800. And see, the truck is now worth $3,200. And our assets are $15,200, which equals $15,200 liability and equity. Alright, I got a couple minutes. Good. So let's talk about why we do the journal entries the way we do, or why I think we do it. We've made one journal entry with the truck before, when we first purchased it, when we messed with the truck and the checking account, but that's for $4,000. So now this is the way the balance sheet's going to look. Checking account $12,000, truck or whatever asset for $4,000. You're going to have your accumulated depreciation of whatever fixed asset for a certain amount. We have $800, and then it's going to show you what the fixed asset is worth now currently, $3,200 in our case. When I'm just glancing over the balance sheet real quick, it's nice. It's going to have a section. I don't really have the room. I'm sorry for all the sections, but I don't want to differentiate either that much. But on a balance sheet, they're going to have, look at a balance sheet in your books or Google one for fixed assets. This is what the truck is, and that's what you would depreciate a fixed asset. I mean, you don't depreciate everything, you depreciate fixed assets, okay? You would notice, looking at the balance sheet, you would notice, okay, they bought this for $4,000, they bought this truck for $4,000, it's been depreciated for $800, it's worth $3,200 more on the balance sheet, you know. You could see, and I would leave this on the balance sheet, like after it's fully depreciated. I would still leave it on there. So it kind of tells a lot. It tells pretty much what it was purchased for, how much depreciation has been taken, and then I guess, you know, what it's worth on the books currently, and it tells you that by how we do the journal entries. And as you can see, accumulated depreciation is a contra asset because it's up with the assets, but it's contra because it's subtracted from the assets. So it's kind of weird. But I think, you know, all the journal entries are depreciation expense and accumulated depreciation credit. How much time do I got? Oh my god, I'm almost running out of time. Okay. I'm doing great. Well, I'm doing really good, trying to be positive, and it's really weird. Things are just falling in my lap, and there's nothing I enjoy more than the YouTube process. Like, I love the YouTube process. I'm learning so much about myself. I was feeling a little lost before I found the YouTube. Anyways, I just feel really fulfilled doing these videos. I have different people tell me, like, how proud they're, like family members tell me how proud they are. Like, my aunt, I just got a text message, you know, from my aunt yesterday from Texas, and she was like, hey man, I'm just so proud of you. You know, she said, hey John, hey man, I'm so proud of you. And so it just means a lot, you know. Yeah, and I wouldn't be able to take that compliment as well until I've been learning on the YouTubes that to take the compliments along with the hate and